Hi, my name is Daniel Chu, and I'm a multi-asset portfolio manager in the Russell Investments Sydney office. Russell Investments is a leading global investment solutions provider aiming to improve the financial health and security of our investors over the long term. We've been in business for the last 85 years, and we're in over 30 different countries. We're a multi-asset specialist, and we're here to talk about the managed portfolios. Based on our decades of experience investing in Australia and globally, we've built the managed portfolios using three key components. In terms of the first component, we start with the dynamic core. This serves two key purposes. Firstly, it enables portfolio managers to tactically tilt between different asset classes during a volatile market. Secondly, we gain access to some of the best-of-breed managers that we are researching around the world, and these are not readily available on a retail platform. The second component is the direct stock portfolio that benefits from the transparency and technology of a managed portfolio platform. Here, we invest in a multi-factor approach which benefits over the long term in terms of excess returns. Finally, we round out the managed portfolio with the active and passive ETFs to hit a competitive price point. Our investment philosophy is focused on outperforming over the long term using our best-of-breed approach. We focus on asset allocation and active stock selection. We have a three-stage process which is focused on design, construct, and manage. That's D, C, and M. In design, it's about optimizing the long-term mix between growth and defensive assets to hit our long-term investment objectives, given the constraints such as volatility and investment horizons. In the second part of DCM, with construct, it's all about building out the design, selecting from active managers, passive ETFs, and direct stocks. And finally, in manage, it's about navigating volatility. We use a framework that's focused on the cycle, valuation, and sentiment. That's C, V, and S. For a particular asset class, there can be a favorable environment in terms of a business cycle, so that's where the cycle plays a role. With valuations, we're trying to determine whether an asset class is cheap or expensive. And finally, with sentiment, we're trying to assess whether there's excessive greed or fear within financial markets. When we were researching the design and build for the managed portfolios, we looked at other solutions that were often very static, they lacked diversification, and were limited by the amount of active managers that they could select from in a retail platform. This is why we solved this by investing in a dynamic core that enables portfolio managers to tilt between different asset classes. It has a layer of added diversification through alternatives as well. And finally, we have a greater scope and breadth of active managers that we can select from. At the beginning of 2020, heading into the crisis, we held very little high-yield debt because the valuations were expensive. As fear gripped markets, equity markets and credit sold down. Our cycle valuation and sentiment framework became very positive on growth assets. We started buying equities and credit, and we held it to mid-2021. In the middle of 2021, we started to scale back our positions in equities and credit, and this has been beneficial to portfolios. On top of that, our active managers have outperformed their benchmarks as they found opportunities during the dislocation. Retail advisors and our partners are looking for an institutional-grade managed portfolio solution, which is focused on diversification, dynamic asset allocation, and active stock selection. Financial advisors use these managed portfolios as a total solution or as a core within a core satellite approach. A direct stock portfolio is customizable, and we have a sustainable managed portfolio which factors in ESG considerations.